Okay, before these orders disappear, the market's closed. It's been closed for about 3 hours, 3.5 hours right now. And the funny thing is that if you set a script out there, an order, and you put an expiration time of 8 hours, it literally is going to disappear in another 5 hours, 4 hours, which is kind of funny. And that kind of surprised me the first time I had a daily order, and the next day I'm sitting in front of the monitor, and all of a sudden the orders disappear, and I'm like, geez. So funny. And you can have a pending order that's sitting there to catch the Sunday night open if you set it to a week. So the weekly orders can all be pending out there, and it's really not going to matter. What I did here at the end of the day was I just kept on running one script here. It's a 4K. And what this guy does is when you drop it above, it's a sell limit. When you drop it below, it's a buy limit. And I call this a limit grids. That's kind of extreme. I call this a limit grids. Let me see if I can't carefully zoom in. Okay. Yeah, so the way this runs is it's going to be in a 3-pip range. At first, this was a little bit of a brain teaser, but if this is 0 pips, and this is 1, 2, 3, and this is a 3-pip range. So here's your 1 space, 2 space, 3 space. If you actually buy the top and bottom of that box, which is what I'm really doing, it's going to be 4 tickets every pip, which is pretty broad. In a 5-decimal broker, you'd be surprised if you're scalping and you want to lay in a denser bank, then you would just drag and drop this in between and create the 8K order. So I've been experimenting with different, if you kept this to just 3-pip entry zones, then it's a matter of deciding how much you're going to risk to reward. Now, this is kind of set up to scalp. Because if I put a 20-pip stop on, it shows the sequence that the script chooses, stops on the left, profits on the right, I'm going to risk more than I make here, but I'll have a higher probability on these 4 tickets spaced 1 pip apart. In essence, if you take this 20 pips, it's on each ticket in here, which means it's really a 7. If there was no spread or commissions, it's a 17-pip stop, right? Because it's or maybe it's a 16-pip stop, but you're going to take, you're a 3-pip range here. Yeah, some from the top. And so I would say it's 16, but in reality, it's a 12-pip stop because there's going to be possibly the spread gets wide, possibly there's slippage and all that nonsense. And if all you focused on was this one thing, now you could pick a 10-pip range and put 4K in there. I guess if you're a perfectionist, you're going to make sure that it's like, this is linear spaced, or you could have it logarithmic. And you could just have that one ticket. Well, here I have, in essence, this is double your money. This is worse than double your money by the same magnitude. So running both of these blended in is going to be a break-even order in essence. So you could go up here. Now you could write different ratios here. This can risk $8 to make 4. This can risk 4 to make 8, but it's just better than lottery tickets, right? Now, when the market's open, it's going to look like this. You come over here, and obviously you're going to, now these are 8 hours though too, so this is a whole nother factor. If these were weekly orders, and if you had enough money in the account, obviously this is support and resistance I placed them at. They're all limit orders. The nice thing about limit orders is if you've ever traded with stop orders exclusively, the problem is that when it fills you, say the market's going up here. Let me zoom in. The problem is, this is the 30-minute chart, is that if you place a buy stop here, right, once they fill you, you're going to wish that you had a limit down here as a backup plan. You always need a backup plan. That's a classic, right? I just watched this guy, one of these block traders, Somebody sent me a link, and Jesus, people, when are they going to figure it out? That really, talking about stop rates. There's no such thing as a stop rate. It's low volatility, and then it breaks out. I guess, and then it's about, well, the institutions are going to do a stop rate. No. It's just the hole that filled there, right? See, the vacuum filled. And when it is low volatility, if you are placing sell stops here, buy stops here, now if you place a buy stop there, they trapped you, but you've got more you've got sell stops stacking up here. If you're going to balance that equation, or you're looking at the double top in time, half-hour British pound today. Now, you didn't take any rocket science to see this top inside the bottom carried forward is going to be your, what these people call a trading block. But you see how densely I put these orders in now. Order density in a zone is the way to maximize this whole game. Because to get in here on close and put your stop below there, running too tight a stop, they kick you out, they go out without you. Well, you're either going to have to place a buy limit here with a wide stop, a buy stop here with a wide, they have to be wide stops. Maybe you can tighten them up after the market goes your way, or you're just getting out because you want to get flat real quick in these markets. You don't want to ride this shit out. Trust and believe. My friend used to say, trust and believe. Now you can draw a perfect trend line here on the half hour, connecting these. It's a triple bottom at an angle. A little bit of an uptrend in time. The wicks, this is a new low. So the reason why you want to have buy limits for the new low, you're watching the momentum of the market, which is nothing more than closing prices the way they behave. And maybe you do have a volatility breakout on top of this wick, top of this wick. The problem is when you get on the top of this wick or the top of this wick, you need to cancel. This is the hard part. If you're running buy stops religiously, you really need to get rid of this, at least this one, right? Because you know that, hey, you know what? That looked good. Of course, the ATR here is too big to justify a stop. To me, stops only work on breakouts. And on the half-hour chart, yeah, you're going to take more risk. Because mechanically speaking, if your sell stop here, your buy protection should be up here, but it doesn't have to be. So just watch this guy talk about, well, I'm just going to wait for the stop rate and then get in. I don't wait for anything. You shouldn't have to wait for anything in these markets. The market will come to you guaranteed. So I sold up here. Now, the whole day I'm buying and selling in these things. I'm short here with a 20 pip stop. These are underwater right now, these things. I'm up in the account overall. I don't really care if they take me out of that. I'm going to sell more up here. So when you hear people talk about harmonic trading, the first thing I thought of was harmonic order placement. You're placing your orders in these dense, these are like micro. Oh, another guy was talking about micro trends. I almost jumped out the window. This guy was getting so late. He's like, see that micro trend? Okay, we're going to put a buy stop here. Okay, you're going to be right. You're going to be right, but my God, you're risking. I don't even know. There's so much going on in this half-hour chart. You could sit here all day and show all the tops and bottoms. It's like, oh geez, hit the wrong key. It's like this. You can see the doji is a small move. That is the order block. I got this order block shit in my head. And it's all the same thing, right? You call it potato, I call it mayonnaise. So this top becomes a bottom here, carried forward. Micro top become a bottom, micro trend. Major top become a bottom. Here's the bottom become a top failure, right? Sellers are supposed to come and take it in. And a lot of people have targets down here. Don't forget, people are like, well, it's going to go back to the bottom of range. And they could be right. Because, like, does it retest, right? 2 chances to retest here, and then the final kickback before you run it up. Is this a stop raid? It moved. How do you know if that was fueled by stops or it's just somebody buying so much that there's not enough sellers to compete? Or it could be people that sold here, their stop got hit here. Some of that's fueled by just natural order placements from the herd, from the crowd. Whatever happened to that book, The Crowd? It's just mob behavior. It's not some institution running, rating stops. They don't go, let's go, but if the market went sideways for 3 years and all of a sudden it started, you can look at dollar Swiss when it was unpegged. Was that a stop raid? No. It just like the market goes sideways, it's going to go up. It's just going into the void. It can go anywhere. These are over the counter markets. They can't, it's like, commodities, you can only go like $2 pork bellies. You can move $2 a day up or down. You can't, they just close the market. They don't close these markets. These things trade over the weekend. So what if something bad happens? Yeah, it's going to gap open on the next day, right? But it's about size. Because if you scatter your orders around this top in such a way that you have a soft fill and maybe you have soft stops, that you can survive all these moves. You're not an all or nothing entry. You can see, you're going to call this a right now, all you have to do is back up, and the hole from yesterday I was talking about, you're either going to fill the hole above or below, but once you fill this, you should already be anticipating. Now, if you put 1Ks in spaced like this, it's completely different than putting in 5 standard lots per. Now, if you don't have enough money to count, buying 5 standard lots here, imagine if you just literally, I think this is 25 pips on this grid. If you just said, well, I'm going to put in a buy limit here, here, and here, and just like end of the world stop, right? Just huge stop on that. And you walked away, and you came back at the end of the day. Well, this one you're killing. You saw one there. This is no Fibonacci here. I'm just picking increments of like how much I can afford. Maybe even bought here. And look at this one's at break even. This one's in profits. This one's in profits. But if you didn't get out up here, you're like, holy shit. This one's underwater. This one's break even. You have to count. So I made fun of this order flow shit. The funny thing about this order flow stuff is that these guys are looking at a chart of other people's tickets. I just watched it because it's kind of funny. Because I said in the video, oh, is that my ticket? Because like, what does it matter if you're not in the flow? So you have, if trading is a business, you have cash flow, you have order flow, you have buys, you have sells. Not everybody's going to, not everything's going to work out. And some of that stuff, the market's never even going to reach that price. Like you could have the most precision, over precision, right? If you got sell limits up here, and it comes up here, and there's no fill because you just have one ticket sitting at some whatever, for whatever reason, right? It's the end of a mosquito's wing. And you get in there. You don't get in there, and you're like, oh, damn. Now, another thing that can happen, I just watched this guy, when you watch these people talk about their trading, you can see the psychological barriers. The one guy said, well, what I'd like to see, he kept saying what I want to see, what I'd like to see. Well, it's not up to you. This is the one thing, it's really setting yourself up for failure to get these fucking bat wings and these moving averages, because it's like, well, I want to see it come to moving average. Yeah, but what if it doesn't? Do you have a chase plan? And I say chase plan when the market's going up and you're like, damn, that ain't like going down. If you have a way to psychologically board that train in some manner for some amount of money just to get used to that trade, because unless you I don't suggest. I mean, I maybe I don't have the brain power to look at more than one currency at a time. Just like I can't have more than one psycho babe in the room at a time, right? Unless we're just going to joke around. And so you can only afford to really do one currency, because all you have to do is change time frames, and you might as well be on a different planet, right? So as far as how much you can expect on a range trade on a 5-minute chart is a little different than, but when the market breaks out on a 5-minute chart, it looks like the end of the world if you're not looking at the 4-hour chart in the rearview mirror saying, oh, well, this is just nothing. But I mean, this is if you're really in a big trade too. If you're in really big, you're like, geez, a little move is very, I'm assuming it's all one direction, you're not hedged, but you just notice that. Who doesn't notice that? Nobody talks about. Well, you can tell me, and then I guess the idea there is that you just have this trading system that's so good that you have confidence in it. It's just ridiculous. You're really building an airplane that can fly on 5 planets that you've never been to. I mean, it can actually fly on the moon where there's really no atmosphere. The gravity is really kind of like light. But this plane, you're going to design one plane to fly. You can't. You have to have a plane that can land on the moon. You have to have a plane that can land on Earth, because you'll never survive. I don't think, I can't say you never survive, but a lot of people that trade have day jobs. I mean, or they just trade for entertainment. But if you really, really, I just watched this documentary. It was almost like a reality TV show. 4 episodes of this documentary of these traders, and guy takes traders off the street and kind of reenact this turtle trading concept. You just take people, and he never really gave them any kind of he just sent them out there to trade. And the one guy is screwing up the trades, and he's just betting really big. I mean, these guys bet their whole allotment. They sit there and they were 1 week in front of the monitor, 3 weeks, and then they put it on some hairy trade, as if they studied everything real good, and now I'm just going to put on this monster trade. And the guy that owned this business is getting pissed off. It's got to be like a staged producer thing, because really, they're trading the guy's money, right? Supposedly. Maybe it is true. I don't know. I've heard a lot of things about these reality TV shows. It was like a trading version of reality TV. But in the real world, I guess, of emotions, if you, even a millionaire, if you ask a billionaire, hey, you want to, they'll say to you, that's $5. I swear to God, I know people that have money, and they will say stuff like, I don't know, that's $5. But they'll drop $100 on a bottle of wine, but then they're like, I don't know, $5 for that hot dog? So everybody has this weird thing where they compartmentalize what costs something. And the guy was just watching this like an ICT clone or something. I thought to myself, this guy was scared to trade. You could tell, because he was like, well, I'm not going to. He's got one bullet in his gun. He's got a musket, right? He's like, well, I better make sure this thing's just right. I'm like, yeah, because by the time you reload, the market's already moved, right? Obviously not a scalper, although he went to the 15-minute chart, the classic, let's drop down to the trading chart. Hell, when you drop down to the 15, you're like, God, I could be here all day scalping. I mean, why look at that time frame unless you're going to trade it? Because you're just going to get so pissed off when you go to the 15-minute chart. You're going to go, fuck, man. I don't know about you, but if I look at the 4-hour and I go to the 15-minute, I think, damn, there's too many, like, there's a lot more zigzags in here. I could actually just trade the 15. And then you say, well, that's a little bit, active trader to really trade every zigzag. And then you go to half hour, you go, half hour I can handle. But you go from the half hour to the 4-hour, it looks like a weekly chart, and you're thinking, yeah, I have to just get into the market. It's like I can't get a breakout on I guess I could. A 4-hour bar gets really quiet. Put a breakout in there. But you see some monster 4-hour candle, party's over. What are you going to do? If you see some monster candle like that on your screen, what's your trade? Well, fuck, unless you had limits to capture that wick. Now, when I look at a 4-hour chart, all I'm thinking of is, like, if this is a 4-hour chart, I'm just saying what I'm doing. I forgot to put the NFA disclaimer on all my videos. It cracks me up. Trading might be risky. Here's the British pound falling in a hole, but look at this from a 4-hour perspective. You can see the trade plan here is to you get this. There's nothing you can do about these 8 hours of slam down. So your trade plan here was to start buying. It's hard to see with all these orders, but here's the wick. If you started buying here, you bought here, and you bought here. Now you laid it. You can see this is, if you didn't jump on the short train on stops here, you still had a chance here in this 4-hour, right? Even if you got trapped here, you made so much money back on this giant smash down. So this is the vacuum I was talking about in my previous videos, that we're either going to fill this side, which we didn't quite. Now, this is a flat bottom, whatever you call it, pennant, flag, block, right? It's a block of price. Look how quickly that, now that's quick and dirty money, man. If you had sell stops here, down here, the trick would have the targets streamed out, and maybe your target was, even if your target, say you put a sell stop in here, this is just mechanical trading. This is as easy as it gets, right? Your sell stops are, you put one on each bar, so you have a bigger position going short here. If you kept cancel replace, then you would get to a point here, and then it's got a little slight fill, but here, this stacking up, right? And these haven't filled yet, so they're not using any margin yet either. And your protection for these would be maybe this, right? And you keep crunching that up. It's a lot of managing the entry. And if the exit's predetermined, that you're going to get out here on a retest of that, you're going to get out here on the wick, and maybe you're out of the whole trade by here, right? You don't even realize this last gust of wind. But that's okay, because you had the forethought to think, well, once we take this out, maybe this is nothing but a hole being filled, and once that's satisfied, it's going to go the other way. So you have, as you're getting out of this, you're buying here and you're cashing out here, and everything's going in this interlaced handoff where you're going to hedge for a little bit, and then okay, now the buy limits are coming in here, and you have a nice fat buy limit here for a scalp into the bottom of that, just the wick. You're scalping just the wick here. If you have buy limits, and I said buy limits because you would put a power pack in here, and once that fills, your exit would be here naturally for the scalp, but it blows through that. Then when this pullback on the 4-hour, on the 1-hour it looks great, and 1 hour you would be like, anytime the market's here right now, so you can see the pressure's building up, and maybe it will poke and smash back up into here. But then you want to sell there, so you can sell. You can hedge you can corner the market by having sell limits here already, right? You know you're going to sell it there anyways, but you want to go long into it maybe, or maybe you don't, because that's enough. But you see the market unfolding. So this order flow stuff is your orders flowing into the market to get filled. You can't be a passive. You have to be as dynamic as the market. You have to be, you couldn't think twice about putting an order in. The only thing that might be disturbing is waiting for it to get filled. Now, if that's the problem, just buy the fucking market. Put a wide stop in and go, okay. But I wouldn't buy now, because it's on this, it's going up. I'd only buy if it's going down at the market. So when this came down here, I would have bought. Now it's a little bit daunting a task, right? Because you're losing, right? You're losing if you're underwater. If you have a wide stop and you're losing, you're getting stopped out, and you got to re-enter. Now you repay commissions and spread, which is kind of a. I haven't done the math on that, but I'm sure if you do the math on that, enough stop outs, you should just put a wider stop in and just pull the trigger less, or what. That is so critical. What separates you from making 20% a week from making 50% a week is all this little shit adds up. And you can't just say, "Oh well, I'm trading Gartley's this week and I'm making so much more money." How is that even possible? That's impossible if you think about it, because that would mean you're trading some giant. How big are you trading on these tickets? Are you going to donate to one idea with some? You should have seen the guys in this documentary. It was cracking me up. I didn't think these guys trade with stops. But so for instance here, this is very difficult. This is the 1 hour. You've got to be the guy that goes, I'm going to buy down here at support, sell at resistance, buy at support. Very sloppy. You got to have a bunch of orders. Some are wide stops. Some are take profits towards the center. Who's waiting for this one? And if you're waiting for this big plunge, your sell stops, you're range trading this, but you've got a counter. I guess trading is complicated if you were to really trade it, because you can scalp back and forth here. If this is how many pips you're trying to make, 5, 10 pips, right? If you don't give a fuck and you can see this vacuum forming and you're willing to say, you know what, I'm just going to put, and there's also a vacuum above, I suppose. But the last price pulse was up, sideways. And of course, if you are selling on a stop here, this is where you're pissed off. They fill you there, then they stop you out there. Okay, you're out of that whole trade. You can't just trade one position. Because this whole time this is going on, you anticipated it's going to crash. But it's like 4 times up. This is over the period. This is 8 hours of bullshit. Big payoff here. Were you even big enough to make money on that? And if you didn't get the fuck out, and this is a 1 hour chart, mind you, that when it's here, you're like, oh, jeez, should have got out. They call this whipsaw. Some guy in that video that blocked this other block guy, the guy says in the comments, so cute, he says, well, when that stop raid's going on, how do I know it's a stop raid? Because, you know, when it's going on live, it's kind of like wild. Yeah, like, and so the vacuum forms here, we fill it, bam, come back, and just wicked, right? But we still haven't gone down here for that new low. So having, like, if you're trading 20K and each one is on a separate ticket, there's 20 tickets that you're managing, but this is what you're doing instead of analyzing Fibonacci bullshit. That is taking you away. Who takes a measurement stick, you know, a tape measurement on a date, right? I mean, when we were kids, somebody said, somebody called out the dimensions of a girl, 24, 36, whatever. This idealized math, right? I think it was your breasts, your hips, and your waist or something. I don't know. But if that's your tool, your fib tool, you're like, oh no, that chick, she doesn't qualify. I mean, these the hottest chick in the world, right? No. And you're gonna go on a date with a measuring stick, with a tape measure? Really? So if you're gonna fuck the market, you can't sit there and have all that stuff. You gotta be like, I got my finger on the trigger, or I got my hand on the orders, or you placed all these orders in advance. The only problem there is people think that's aggressive. I don't know why. Because I guess they want to see it happen. They want, I want to see the price action when we get down here. If I see there's an inverted hammer right here. But only on the half hour. I mean, the 1 hour doesn't exist on the 4 hour or the 15 minute maybe. And if you have buy limits sitting down here, it's just a pack of buy limits in here with predetermined exits. If you just did that once, you couldn't double tap that. Now, if you're watching this happen live and you've either cashed out of something, you do have to get in and out of these markets, you could have re-entered. Now, a person that set that and forget it and never came back would only realize either this profit or this total extension here. The guy that's babysitting this, or the guy that can come to the screen every hour, every 2 hours, it's going to be able to retap this. And this is actually the better trade because the The early bird gets the worm, but the second mouse gets the cheese. All right, we've already killed this thing. You come back, the second mouse is like, oh, you poor thing. You traded that breakout. He comes in, he's like, thanks for the cheese, buddy. And so that first burst, right, that's an attempt for the market to... but what's really happening? I always wonder, what's really going on there, right? Is this the bear stops feeling that move, or is the institutions and the big boys driving that up? It doesn't matter. It's a combination. It's not one singular thing. How can there just be, if it was just like, oh, there's only, can stops, right? I mean, stops are, besides, people have buy stop entries. In other words, the guy that has a sell stop in here who's long, there's also guys that have sell stops to get long, and there's people that are just selling it, and they ran out of buyers. And it's going where the path of least resistance. That's all it is. So you don't need, I mean, you can think that it's a grand conspiracy. You can think that, oh, well, this is happening to this, and that's happening to that, and this is what's going on, but it wouldn't matter. And the interest rates don't matter, and none of that matters. Brexit and all that shit. If the British pound wasn't going into uncharted waters, well, I mean, the fact that it went down, yeah, could have easily gone up into uncharted prices to the upside. So I don't know. I can't think about that shit when I'm trading because it's just too distracting. I'm thinking, well, how can I automate, or how can I make it easier to place a order that is a dense area like this, and I can capture that wick in advance of that move. That to me is the unholy grail. You have this top here inside the bottom. If I went to the half hour, it would be, you'd probably see it close down there. So if I go to the half hour, see it closes into it. 1 hour, you don't see that, but you still see the, here it invades the whole top of that wick. So when you say a top becomes a bottom, on wicks it's a little tough to call that because in time it's a little so-called safer because it's a true structure in time. These are time structures where the wicks are really not structures. They're just areas. So you don't know when that happened. You don't know when that wick happened. And you don't even know how long it took to form that wick. But you do know that Alexander Elder says in his first video that I saw, he says, well, a 13, he describes the market as you're taking photographs of the market as taking photographs of somebody running. But you're shooting at 25 frames a second or something, right? You're shooting at so many frames per second. So the time frame you're trading, it really is the time frame on this closing 1 period moving average. That's the real time frame. The other stuff, those wicks they just really could have happened any time, right? So it's not a true representation. It's what happened during that time zone, but it's not really the momentum. And here, I'll be selling this. The market's not open now, but as soon as it comes up here, I'm selling, and it's kind of cash out on the way back. They're all scalp, but they're high probability trades. Especially when it's going sideways like here. We could put buy stops and sell stops on that right now. But we could also have a buy limit here, and we have sell limits to start up here. So continually running order flow, the flow of your orders. It's not this, people have this vision of, well, that's for the other people, right? If you've ever done anything that people thought, well, God, and then you do it and you're like, what are people talking about? There's more mystery to the, my buddy that said he was in Hollywood once, and I think this is before he got ugly, and he was in a limousine, and these people are like, they wanted to get in a limousine or something, or they wanted that lifestyle, and at this time he was already, already gotten cynical. And so he's like, you want in here? You want to come in here? He's like, I wish I was out there. So this whole idea that it's this kind of like, in the intro of this guy's block video with these laser sounds, honestly. So I want to just bore you to death with something else here. But what I'm saying is that it's this navigation, like, really is a lot of work. Trading's more work than I thought it would be. Like, I really did think, I had the original conception that, well, I just need like a good system. I'll just get in and it'll be all there is to it. I didn't think I would have to place, in other words, that to reduce my risk, I would have to do more work. Or not to reduce the risk, but to make it, to utilize the margin better, I would do more work, right? Because if you just bought a 50K at the market with a 100 pip stop and, can make money, right? But that's not a lot of work, right? It's more work to place 5 10Ks or buy a 10K at the market and buy one 8 pips deep on a limit, right? Because if you think it's going to go up and you think it's not going to go down before it goes up, you've got to be kidding, right? But I know that people have built their brain thinking that, oh, what strategy are you using? My strategy has always been the same, buy low, sell high. I think it's everybody's strategy, whether they like it or not, because it's the only way to make money. Sell high, buy low. You got to buy it back on your take profit. So that's completely off the board. Now it's just a matter of, well, where do I place an order? And people are really afraid to place an order up here in so-called no man's land. If you feel unsafe, you could build a channel up into no man's land and see, oh, you know what? By tomorrow morning, I mean, if you really wanted to do we could get there by here. You could see the same thing as structured trade, right? Like right now, we're creating a hole here. You think this thing couldn't come back and retest? I've seen this come. How many times have we seen that? It comes right back to this thing, then it goes up, then it goes, and then it finally goes up, right? It's this she loves me not bullshit. How do you trade that? I think you can trade that. I think it's just a lot of work. You got to, and if it is that much work to place a sell limit here, so I put a sell limit here today, and I put them up on these ledge here, right? They fill me and pull back, but this is only like about 8 pips. So in that case, if you're going to step in a 3 pip box of entry, you would write, 8 pip stop, a 10 pip, 12, an 18 stop to make. And you have to have this whole drop order banks ready to go. You have to pick the time frame. And if they get cashed out, and they make money, you got to come back and reload the gun. And I don't think there's a robot that could do this. This amount of determining zones and areas to densely pack orders, and you can see the really ripe orders. Like here, you're like, oh yeah, if they ever come back. In fact, you got buy limits that start on this wick, and you're like, oh yeah. So that's the trick. I did that on here, and then I reloaded them. So I have buy limits down here again. So after they cash, I redrop those. But I couldn't imagine doing this on 8 pairs. The guy in the video says, oh, I didn't get in here because I was watching the other currency. Yeah, you can't. You can't molest 2 girls at a time, right? You cannot do it. I'm just speaking for myself, apparently, because all these guys are out here doing these things. Oh, yeah, and then let's take a look at the Australian against the CAD. Like, why? The spread's brutal. I got to fucking get my brain around all that. I got to place all those orders that I just placed. If you just have one currency, besides, once you open up the trading terminal, you can manage all those tickets by price. You can't do. I'm trading 5 years. Okay. I've tried it all. Okay. 5 years straight. Been trading 20 years back in commodities. When FOREX started, I traded the shit out of it, and without scrubs. Without stops. I probably placed, I'd say, a million trades. And sadly. And on demos, real money, you name it. probably a $500,000 on real money, 1Ks, and just, you know, I tried to trade Australia when I had New Zealand. I mean, I could not make the kind of money I could make on one currency. If I take one currency, I trade the shit out of it when it's going to make a small move. It's easy. I can see that like if your target is up here, well, then we want to reverse there, right? In other words, if you think sellers are going to come in here, right? They're going to come in here. They might come in here. They may come all the way up. So when a market's marching up, if you don't get on the long train in some way, and this is the other thing, is that it's okay to buy and sell at the same time. The guy in the documentary, they were like, the one guy says, you're in a naked position. All these guys were like all or nothing traders off the street, right? Well, I'm going to marry this trade. And they didn't have a hedge on for nothing. And the whole room was on one side of this trade at one point. And the guy's like, you guys are kidding, right? You guys are all in the same fucking trade? He's trading this guy's money, so he's concerned. It's a trading team, supposedly. I can't remember the name of this fucking documentary. And I thought, yeah, watching all the trading mistakes, you know, or the trading dangerous trading techniques, because to hedge this means that you are not you have a vague version of the trend, but you realize the counter trend trades could be more money than the trend, faster money. There's nothing they would say, oh, you can't get rich quick, but you can. If you don't believe it, you can't. You have to believe it. This thing's stop rate shit. That is fast and dirty money. That's very fast money. And are you comfortable making money like that? A lot of people aren't, because they're like, oh, no. This is not a get-rich-quick scheme. No, this is what you have to do. Is in Module 1, we're going to talk about what a tick is. Okay, listen, all you have to do is open an account, and you'll see what a pip is real quick, because you're like, oh, I just pulled the trigger. Why am I down? Well, you're down the spread, or you're down commissions plus commissions. You're like, huh, that's kind of weird. How do I get around that? This is your first clue that you have to be a good loser, because you're going to lose right out of the gate. Right out of the gate. You're going to be down, if you're going to make 50% a day, you're going to be down 10% at some point during the day, right? Or worse. As soon as you pull the trigger on some monster trade, I still don't get that. You got to be such tight spreads, and you got to get out and in a lot. If you queue up all your stuff into one pattern, I don't know. That's the immense, you know, maybe some Adderall. I don't know how people manage the attention span on that trade. And then to think that the bigger move was the other direction, but you were all like about the trend of the day. I'm going to trade with the trend, 100-period moving average. 100-period moving average? Come on, man. What is this like? Oh, I have a club in a cave, and I'm going to have Brontosaurus burger. I'm like, wow, jeez. But it's no wonder, right? And it's, so some guy asked me why I do the videos. I'm only here to help. I'm only here to bitch. I don't know what else to say. I mean, I watch this shit. It's a topic I know something about. Like if I watch somebody fuck up rebuilding an engine, and I think I've seen that. I think I know about rebuilding engines. I've seen people fuck that up too. In fact, I went over to my buddy's house, and he's rebuilding this Camaro, and he gets the part back, the head back from the rebuilder guy. And he can't get some of the parts don't fit. And I go, well, why don't you just take, he was too nice a guy. So why don't you take it back to the guy and tell him the tolerances are so fucking off on that. Can't even install it. But see, people are too nice, and they'll put up with, I mean, there was nothing with the traders in this room. They asked them, hey, how do you feel about, ripping somebody off? They're like, oh, I wouldn't do that. Well, they couldn't even place an order, because they were like, they'd call and go, oh yeah, I want to. He goes, you just got to place the order. They don't care. They don't care if you just call up and go, okay, give me 5, whatever it is, and hang up. And these people had this, they took this niceness into the market. The market's just a real cold, it's just numbers. And so I really feel bad. I don't want to rip anybody off. like, I'm not even charging for my videos because it's too much drama. Besides, if I were, somebody asked me if there was a course, it's like, well, I couldn't do that because like if you were paying $197 a month, I'd be like, I'd feel so like, oh my God, I would have one client, right? I guess like, how can I accommodate? I would feel like, well, I'm ripping this guy off. I mean, fuck, I can't like to really, you'd actually, and besides, I know that person's never going to trade the way I trade because they're never going to feel comfortable doing that, right? So it's a disservice. If you know how to trade, fucking make money. I'm doing the videos, so it's like a video journal. Actually, when I explain it, apparently my subconscious is picking up all the things it's supposed to do. When you're trading, and so I'm trading, I like to think out loud in the video and say, okay, well, here's what do we do, right? Because I don't want to think that I'm not into the passive world of like, well, we'll just wait and see what happens, and if it goes up, then I think it's bullish, and the bulls are in control, and I'm going to buy. It just seems like, wow, really? That's that easy? I don't think so, because how much am I going to buy? Where's my stop going to go? How long am I going to be in? Which time frame do I? Well, that was the first thing. I remember somebody said, what time frame? I thought, yeah, what time frame? I used to ask people, what time frame are you trading? Like there was some better time frame. I don't think there is. I think that's the one you can handle managing because the market's moving all the time. In some time frames, 1 minute chart, you wouldn't trade that looking for tops and bottoms necessarily, right? Maybe a triple top becomes a triple bottom. But, the tendency is to slice it thinner to reduce the risk and tighten up the stops. But then you're living in a fantasy land. Because for you to make 40 pips on a swing trade, you need to have a 20 pip stop. Or even a 50 pip stop. Because you have to get in that perfect sizing to really, I've had it happen a few times where I've had the perfect order bank. This is about 5 years ago. I wrote the script. It was this big, giant order. It was a double-click order. And here comes the British pound. Plunges into this thing and zips out. The whole trade's over in like 40 seconds. I'm up. I'm flat. It's gone. It literally, now, the fear of missing out would make you buy one at the market and buy him on limits all the way down. The fear of not missing out is you put in this iceberg order, this order bank, the scalp bank, and you walk away. And if they fill it, they fill it. If they don't, they don't. Now that's why if you're going to trade more than one currency, you get a different account, a different broker for each currency. So you go to your other computer, your tablet, your laptop, or your your whatever you have, and you trade on that. So you got the other thing waiting to get filled, but you had to do something in the meantime. If you don't have a day job, right? Or you could just sit there and do math and dial stuff in. So I asked myself one day, if I had $20, and how big could I trade with $20 in my account, or $20 of risk? And so, how tight does my stop need to be if I'm going to risk $20? Well, on a 1K, I can go for a 200 pip stop, right? So I went to my spreadsheet, and I'm really proud of my first spreadsheet here. Not really spreadsheet, I just screen captured the... But I was astounded when I really looked at this because I don't trade... on one single ticket, I don't trade any bigger than a 1K because I can just trade 5 of those. I'll be at a 5K real quick, and it doesn't take long with a wide stop. Right? So if you have a 20 pip stop on 5 tickets, right? You're risking $100, as opposed to, so I can risk more and I can endure more volatility. I can also go tighter than a 200 pip stop. So the my spreadsheet, I was able to, I got to get back to the beginning here. Okay, here's the first part, and this is pretty dramatic. I didn't think it would look like this, but if I put a 200 pip stop on a 1K, so here's my 1K, and it seems silly, but it's silly, but it's true. So this might not be news to most people, but to me, I was pretty shocked that this 1K, this the 20 pip. This says 200, but this is what it would look like inside the script thing. In a 5-decimal broker, it's 20 pips, but it says 200. Or I'm sorry, this is a 200 pip stop on a 1K. So yeah, that's the actual pips. I'm thinking it's 5-decimal thing, but it's not. So a 200 pip stop is $20, right? And if you put in if you buy a 2K, so here's your 2K, you got to put a 100 pip stop on there. You just tightened your stop up pretty big. And when you go to the 3K, this is what's kind of bizarre is, well, maybe not, right? But I guess my math sucks so bad when I saw the visual representation of this, I was kind of shocked. That go to a 3K, now I got to run this, it's like a 66 stop, 66 pips. And the 4K, obviously, and I saw this, this multi-level marketing trading guys, can't remember their name, trading 4K. So if you trade a 4K, you need a 50 pip stop to risk $20. So everything here is $20, and once you get here, that one extra K to go to a 5K, and to keep your risk. Man, you start to really, so there's such a high drama shift here because you're doubling, and here you're incrementally adding up. So I went to the next level because I wanted to see what these guys, now we're also approaching, as this comes down, we're approaching the envelope, the window of the spread, and commissions are going to start to, or at least the spread's going to matter once you get really close there. I don't think the commissions would too much matter. Of course, the commissions work in your favor if you're trading big per ticket. And then you go from, this is the, that's a 20K. Okay, now this is going to be 1K through 7K. Once you get to here, it's like, wow, you're really getting tight in your stop. Like, what's the point? Well, my point is that the flexibility of these first two, 1, 2, 3, maybe. After that, it's inconsequential. I mean, you're being so ridiculous in a market that's volatile. To enter on one price level and have your stop to get to be so tight here that once you get past 10K, you know, you have to be, so here's 12K, 3 to 12K. You've got like a 13 pip stop down here. You're coming up to 20K, you got a 10 pip stop, right? $20. Now the spread matters because for you to trade a 13K, and here it almost looks like an angle, whereas you do the whole chart printout, it just becomes really compressed at the bottom. And I'm missing that part. Here's a 50K. I think I only went to 50K because here's 70K. Right? 70K. Starting at 50K, you got a 4 pip stop. Now you got a 3 pip stop. And you got in at one price. That's crazy. There's no diversification there. But this is $20, right? You're going to have to risk way more here. Now, if you made the risk go up, of course, it's going to change the whole spreadsheet. It's going to destroy that whole thing. Here, standard lot. Going from a 70K to 100K, what's the point? The spread is that. From here to here. This is like 2.8 to 2. Half a pip. I mean, really? So you're just so crazy close to that. And if you got it at different prices, so the only real, I'd say once you get to like a 5K, you don't have to. Now, if the commissions are high, you're going to trade bigger. But hell, you drop a grid in, a 50K, 10 of these placed at different entrance points. You're still risking quite a bit. Whereas if you have different entrance points in a 2 and 3K, 4K, you almost have to cut it off at 4K, because now you're like you overlap 2 drops. I'm just speaking from like, well, anything really. If you're going to buy 1 pip apart, you can easily take this and do that 10 times. It's 40K. You get up really fast, quick. So that's the other thing. But the, yeah, I don't know. See, some of this stuff's deleting, I think, already. No. Everything's 8 hours on here. I put some 12 hours in here. So the stops and stuff like that, here's risk 12 pips to make 18 pips. It's 3K spread over a 2 pip range. But if you're swing trading it and you're looking at the 4-hour chart and your orders are way down here and you lay an order bank in like this. Now imagine going back to that sizing chart per dollar risk. You can see here if you put buy limits in like this and you spread them out enough, you're not going to really notice. If these were like 4Ks on each, but why not do a high-res entry, incremental entry? That way, even if you bought this thing, yeah, you're not getting too slammed, right? Also, you're trading breakouts, or you're trading at the market on top of that. So you donate, say, this 2% stuff. How about 0.02% is trading at the market? I guess this is where the discipline comes in, right? This is where you get the whips and changes. You need, I only trade this at the market, and then I only trade this on stops. I only trade this on limits, and this way you cordoned off, say, a third of your trades are at the market, a third of your trades on stops, a third of your trades on limits. Because you come to find that your market orders might suck, right? If you don't have especially if the stop is too tight, I suppose you're going to just get kicked out of that and just have to re-enter in an anchor entry, But yeah, so they're getting this, and if you are trading these wild pairs, right, that just move big, you're just going to need a big stop. You trade very lightly, and a lot of that is just to soothe. Maybe that is the best price you're going to get. Sometimes that's it. You never get the limits fills. You will get the stop fills. That will be a riskier trade, but you're going to go with the order flow, right? That's order flow trading, right? You put buy stops, sell stops, and bracket the market. This way you just get picked up on the flow, and you don't need to analyze how many institutions and how many bulls and bears and who's in control. You don't give a fuck. You just bracket the market. It's going sideways. That's the dumbest trade plan on the planet. You just can't live off that all the time, because you are going to get trapped. You are going to get overfilled or underfilled even. And I'm just speaking for people that would want to just trade all week and make money all week consistently and inconsistently. Because waiting for the perfect setup or that stuff, or waiting for your dashboard to turn a certain color, is just mind-boggling. And I don't really like black box stuff. When I first was on my I had a 286 computer that had a black box software. It cost me like $4,000 for the software. 5 1/4 inch floppies. I got 2 algorithms, $2,000 a piece. I had money because I had a good day job, and I was like, yeah, $2,000. I bought a robot for $2,000. Let's just say that, right? Printing out trading models, they call them. No EA, you had to manually execute, and you had to trust in this, that this thing, and this is all backtesting shit. That's why I say backtesting is bullshit, because it plainly is. It's painfully obvious once you take a second thought at it, because you're curve fitting, right? This is all this trick in the book. You curve fit a thing in EA, and you curve fit that puppy, and then you play back the data. That's just how you get these astounding returns. Or you just start the robot where he starts to win. You don't show where he crashed and went off the cliff. This is how they film movies typically. They pick the best scenes, right? They cherry pick the movies edited later. So, besides, it's impossible, right? Who's selling a robot that turns $80 into $50 million bucks, right? I did it. I did a EA. I don't even know. I said give it a fixed. Gave it a fixed spread of really low, like 1 pip, and I just ran the thing. I tell you what, moving average crossover, 1 crosses the 2. 1 period crosses the 2. It made a mint, and it goes at a 45-degree angle. The guy asked me at the video, he goes, "Where can I?" He goes, "I need." He didn't say where can I. He goes, "I need that robot." We all need that robot, right? It just doesn't exist, because when the news came out, this thing thought the spread hadn't changed, and it just went with the market. But when the spread jumps to 40 pips for a millisecond in the real world, it just wiped out everything you had unless you had 40 pip stops, which means you needed a 60 pip stop. If you got original 20 pip stop, you needed a 60 pip stop to survive the news, right? So that's ridiculous. But yeah, it's a lot of work, but it's fun, right? Yeah, I don't know what to say. Somebody asked me for a template. I'm going to put the link into this thing too. There's, I'm not really sure how this hightail thing works. Apparently you have to put links for each page I built, and I don't even know what it looks like. When people come in from the public, when I come and see it, I'm looking at it because I'm logged in. I don't know what people see. Apparently each page has its own link or something, and I can't use that those other things like clouds and Google Drives, because I don't think I remember my password. I can't log in. And hell, I just bought a new a modem and router, and it come to find that this one broker, he can't log in. I'm like, what? I had to update the firmware on the fucking router just to get one of these brokers to log in. I was like, really? And at first I thought it was like, well, naturally, like, conspiracy. But yeah, it's, and the thing is that, do you care where your pips come from? Did your pips come from a trend trade or a range trade? And to really have that flexibility, like, that's how people survive, right? Because people that just have one style, they're just one-dimensional. And I guess you could, right? I mean, people are like, hey, supplemental income, right? You got a day job, you're making some money trading, and you don't have to make money trading. It's okay to just trade and lose. If you're having fun, right? Like, porn isn't something that you like investing in a relationship, right? It's not like the person who's producing porn is going to write you a letter and go, you know what? You bought so much porn. Have you thought maybe you want to marry me? So, it doesn't, it's not like that, right? So we just trade and be flexible enough to not invest and not be really even looking for anything. Of course, if your pending orders are out there, it's kind of fun to have a trap of orders out there and just think, you know what, and they come down there. I guess the only satisfaction is that if you go to sleep or you leave and come back and you see, like I went to today, I took off and I think I went to get some more entertainment. So I went to put orders in. And I just had them literally at new lows, just put a huge bank in. I come back an hour later, and the market had dipped into there, and it was up And I thought, I'm not going to let these profits run. This is nothing but a bounce trade. So there's a lot of bounce trades off the ceiling, off the floor that you can take all day long. But that bounce trade, that scalp, yeah, market went down after that. Went back up, then it went down. It's very hard psychologically to get your brain around the fact that you can just trade both sides of it and just be a complete a risk taker, but it's incremental risk. You're not risking so much. And if the market really does zoom up there, so when the market came up, the market comes up, and the worst thing is if you're not a trend trader and you've got your reversal trader, you're waiting for that thing to reverse, and you keep on loading into that, it's very difficult. You need to ride it back down. You have to trade the whole swing. But you can scalp along the way. So even though you know that in 100 pips north you want to sell, if you lightly trend trade into that, like are you just buying pullbacks in this trend, that's the mental skill that would make you ambidextrous. You wouldn't have to go to another currency, and you wouldn't have to come up. You wouldn't, of course, this would destroy your trend trade with the trend concept, because you're counter trend trading. You're trading with the trend, but you're also set up to counter trend trade for reversals in advance. So you can see the end of that market coming, right? So if you owned a store and you know that these things you're selling are really hot, you know that's not going to last, because they're going to saturate the market. Everybody's going to have them. You got to be thinking of the next thing people are going to want. And, or as they say, supposedly the cliche about Apple is that they built something that you didn't know you needed. So you could have stuff in your store that's coming in. You get the right lighting and everything. Of course, you can't do this in the market, but you get the right lighting and the right music and the right girls showing it. And on the car, they show those cars. They spin them around with those girls leaning up against the car. And you'd be like, okay, this is people are like, yeah, I want that. I don't know why. Yeah, because, I introduced it and you were here for the latest hot thing. You can see, I know that trend's gone. And so you have to be ahead of the crowd. You got to see the end of the trend coming. I mean, you can't just be a blind. This trend continuation trading is cracking me up, right? So I thought to myself, relationship continuation therapy, right? No, you know what? You got to be humping and dumping. You can't marry anything in these markets. You can't let your profits run. You can't wait for your anniversary date. You just got to, when you realize that was nothing but most of the stuff is just very temporary. There is no trend. It's a range that is bending. It's a range that's for the most part it's pulsing up. But hell, I've seen trends that you would be hard pressed to say there wasn't money to make counter trend trading that blew away all the money trend trading. So faster money, right? Faster money. I don't know if that helps. Anyways. But yeah, that's my 2 cents. And